What you're about to see in the precious metals market hasn't happened in over a decade. And when I say God candle, I'm talking about the kind of explosive price movement that changes portfolios overnight, the kind that separates those who saw it coming from those who didn't. Right now, as I'm recording this, gold is consolidating near multi-month highs after a powerful bullish breakout, and silver is coiling like a spring under massive technical pressure. The setup we're witnessing isn't just another rally. It's the culmination of forces that have been building for years, and they're about to release in a way that most investors aren't prepared for. Let me paint you a picture of what's happening right now in the technical structure of these markets. Gold has just broken out of a triangle formation that's been compressing price action for weeks. When you see a triangle pattern like this, especially after a sustained period of consolidation, it's not random. It's the market gathering energy, like a coiled spring being compressed tighter and tighter. Every day that passes inside that triangle, more pressure builds, more traders take positions, more institutional money waits on the sidelines. And when it finally breaks, when that spring releases, the move is violent and fast. That's exactly what we're seeing unfold right now. Gold punched through the upper boundary of that triangle with conviction, with volume, with the kind of momentum that tells you this isn't a fake out. This is the real thing. But here's what most people miss when they look at a chart. They see a breakout and they think, okay, prices went up. What they don't see is the machinery behind that move. They don't see the commercial traders who've been covering short positions. They don't see the central banks that have been accumulating physical metal month after month, quarter after quarter, building reserves at a pace we haven't witnessed since the aftermath of the financial crisis. They don't see the COMEX data showing a dramatic shift in positioning, with the smart money moving to the long side, while retail investors are still sitting on the fence, waiting for confirmation that never comes at a good price. Before we go any further, I want to make sure you're getting the full picture here. I've put together a free guide that breaks down the wealth protection strategies that thousands of American retirees are using right now to safeguard their hard-earned savings. It's in the description below. This isn't about getting rich quick. It's about understanding what's happening to your purchasing power and what you can do about it. Grab that guide, because what I'm about to show you is going to make a lot more sense when you understand the bigger context. Now, let's talk about silver, because this is where things get really interesting. Silver has been in a strong bull market territory, holding above key technical levels that signal long-term strength. But what's happening beneath the surface is even more compelling. Silver isn't just a precious metal, it's an industrial metal. It's in your solar panels, your electronics, your electric vehicles, your 5G infrastructure. The world is electrifying, and silver is the conductor that makes it all possible. We're not talking about a little bit of silver in each application. We're talking about ounces per vehicle, ounces per solar installation, ounces per data center. And here's the kicker. We're not mining enough of it to keep up with demand. Think about what that means for a moment. You've got industrial demand that's structural. That's not going away. That's actually accelerating as the green energy transition picks up speed. You've got investment demand from people who are waking up to the inflation reality, who are watching their dollars buy less every month, who are looking for something real, something tangible, something that can't be printed into existence by a central bank. And you've got supply that's constrained, that's expensive to bring online, that takes years to develop even when prices are high. That's not a recipe for stable prices. That's a recipe for a squeeze. Let me tell you a story about what happened the last time we saw a setup like this. Go back to the period after the financial crisis. Gold and silver had been in a bear market for years. Everyone said precious metals were dead. Everyone said the dollar was king. Everyone said inflation was under control. And then quietly, things started to shift. Central banks started buying. Smart money started accumulating. The technical charts started to show patterns that looked eerily similar to what we're seeing right now. And then, boom, gold went from the low thousands to new all-time highs. Silver doubled, then doubled again. The people who saw it coming made fortunes. The people who waited for the mainstream media to tell them it was safe to buy ended up chasing prices that had already run. Here's what's different this time, and why this setup is actually more powerful than what we saw back then. The debt levels are higher. The geopolitical tensions are more severe. The de-dollarization trend is more advanced. Countries that used to settle everything in dollars are now setting up alternative payment systems. They're trading in their own currencies. They're accumulating gold as a neutral reserve asset that doesn't carry the political risk of holding another country's debt. When Russia got cut off from SWIFT, when their dollar reserves got frozen, every other country in the world took notice. They realized that holding dollars isn't just an economic decision anymore. It's a political vulnerability, and they're acting on that realization. The BRICS nations aren't just talking about alternatives to the dollar anymore. They're building them. They're creating payment systems. They're discussing gold-backed trade mechanisms. They're accumulating physical metal at a pace that would have been unthinkable a decade ago. China's central bank has been adding to its gold reserves month after month. India's central bank is buying. Turkey's central bank is buying. Poland's central bank is buying. These aren't small players making symbolic gestures. These are major economies making strategic decisions about what they want their reserves to look like in a world where the dollar's dominance is no longer guaranteed. Now let's talk about the COMEX, because this is where the rubber meets the road in terms of price discovery. The COMEX is where futures contracts trade, where paper gold and paper silver change hands in massive volumes every single day. And here's the thing about paper markets. They work great until they don't. They work great when everyone's confident that they can convert their paper claims into physical metal if they want to. But what happens when that confidence starts to crack? What happens when the ratio of paper claims to physical metal gets so stretched that people start to wonder if there's actually enough metal to go around? We're seeing signs of stress in the physical market that should concern anyone who's holding paper claims. Premiums on physical coins and bars have been elevated for months. Delivery times have been stretching out. Refineries are running at capacity. The spread between paper prices and physical prices has been widening. These are all symptoms of a market where demand for the real thing is outstripping the available supply. And when you've got a market structure where 100 ounces of paper claims exist for every ounce of physical metal, you don't need everyone to want delivery. You just need a small percentage of holders to say, you know what, I want the real thing. And the whole system comes under pressure. That pressure is building right now. You can see it in the way prices are moving. You can see it in the volatility. You can see it in the way that dips are getting bought immediately, with conviction, with size. The market is telling you that there are players out there who want metal, who need metal, who are willing to pay up to get it. And when you combine that physical demand with the technical breakout we're seeing on the charts, with the fundamental drivers we've been discussing, you get a setup that's primed for an explosive move higher. Let me give you some context on what a God candle actually looks like when it happens. We're talking about a single day, sometimes a single session, where prices gap up dramatically, where the move is so violent that it triggers stop losses, forces short covering, attracts momentum traders, and creates a self-reinforcing cycle of buying that pushes prices far beyond what anyone thought was possible in such a short time frame. It's the kind of move that makes headlines. It's the kind of move that gets people's attention. And it's the kind of move that, if you're not positioned ahead of time, you miss entirely. The last time we saw a move like this in precious metals, it wasn't a gradual climb. It was a surge. It was a recognition event where the market suddenly repriced the value of gold and silver based on a new understanding of risk, of monetary policy, of geopolitical reality. And here's the thing about recognition events. They don't wait for you to be ready. They don't send you an invitation. They happen when the conditions are right, and if you're not paying attention, if you're not positioned, you watch from the sidelines while others profit. Right now, the conditions are more than right. They're perfect. You've got central banks that are trapped. They can't raise interest rates high enough to truly fight inflation without crashing their economies and their bond markets. They can't lower rates without admitting that inflation is out of control. They're stuck in a policy box where every option is bad, and the least bad option is to keep printing, keep spending, keep inflating. And every time they do that, every time they choose the printing press over fiscal discipline, they're making the case for gold and silver stronger. Think about what inflation really means for your retirement savings. You've spent decades building that nest egg. You've been responsible. You've saved. You've invested in traditional assets like stocks and bonds. But what happens when the currency those assets are denominated in loses purchasing power? What happens when the dollars you've saved can buy less and less with each passing year? You're not actually preserving wealth. You're watching it erode in real time, even if the nominal numbers on your statement look okay. This is where physical precious metals come into the picture, and this is where a lot of people get it wrong. They think of gold and silver as investments that need to go up in price for them to win. But that's not the right framework. Gold and silver are insurance. They're wealth preservation. They're a way to hold value outside of a system that's actively debasing its currency. When gold goes up in dollar terms, it's not really gold that's changing. It's the dollar that's losing value. Gold is just reflecting that loss. Now, if you're sitting on retirement accounts with 6 figures or more, there's something you need to know about how gold IRAs work. I've put together a comprehensive guide that walks through the process of getting physical precious metals into your retirement account without triggering tax penalties. It's not complicated, but there are specific rules you need to follow, specific custodians you need to work with, specific types of metals that qualify. The guide covers all of that. It's in the description. And look, I'm not here to sell you anything. I'm here to make sure you understand your options, because what's coming in the precious metals market is going to create opportunities, but it's also going to create risks for people who aren't prepared. If you've got significant retirement savings and you're concerned about market volatility, about currency debasement, about geopolitical instability, this is worth your time to understand. Let's get back to the technical picture because there's more to this story. When gold broke out of that triangle formation, it didn't just break out. It broke out with volume. Volume is the fuel that drives price moves. Without volume, a breakout is suspect. It might be a false move, a head fake, something that reverses quickly. But when you see volume surge on a breakout, when you see participation increase, when you see the market commit to a direction with real money, that's when you know the move has legs. That's when you know this isn't just a technical blip. It's a shift in sentiment, a shift in positioning, a shift in the fundamental supply-demand dynamics of the market. Silver's chart is showing similar characteristics, but with even more explosive potential. Silver tends to lag gold in the early stages of a precious metals bull market. Gold moves first because it's the monetary metal, the safe haven, the asset that central banks and institutions turn to when they're worried about systemic risk. But once gold establishes a trend, once it proves that the move is real, silver follows with leverage. Silver is the high beta play on precious metals. When gold moves 10%, silver often moves 15 or 20%. When gold doubles, silver can triple. That's the nature of the silver market. It's smaller, it's more volatile, and it amplifies the moves we see in gold. Right now, silver is holding above levels that technical analysts consider critical for maintaining a bull market structure. These aren't arbitrary lines on a chart. These are price levels where supply and demand have historically found equilibrium, where buyers have consistently stepped in, where the market has demonstrated support. When a market holds above these levels during a consolidation phase, it's telling you that the underlying bid is strong, that there's conviction among holders, that people aren't willing to sell at these prices because they believe higher prices are coming. The measured move targets from these technical patterns are substantial. I'm not going to throw out specific numbers because markets are dynamic and targets are guidelines, not guarantees. But what I will tell you is that the technical structure suggests we're in the early innings of a move that could be significant. The kind of move that changes the conversation around precious metals. The kind of move that brings in new buyers, new attention, new capital. And once that momentum builds, once the trend is established and recognized, it becomes self-reinforcing. Here's something most people don't understand about market psychology. Markets don't move in straight lines. They move in waves. There's an initial move that catches people off guard. Then there's a pullback that shakes out weak hands and makes people doubt the trend. Then there's a second wave that's even stronger than the first, that breaks through resistance levels that seemed insurmountable, that forces skeptics to reconsider their positions. We're potentially at the beginning of that second wave right now. The initial breakout has happened. The market has shown its hand. And now the question is whether you're going to be positioned for what comes next, or whether you're going to wait for more confirmation and end up buying at higher prices. Let me tell you about the supply side of this equation, because this is where the long-term bull case for silver becomes undeniable. Silver mining is not a growth industry. Most silver comes as a byproduct of other mining operations, copper mines, lead mines, zinc mines. When those base metal prices are low, when those operations are marginal, silver production suffers. And even when prices are high, even when there's an incentive to produce more, it takes years to bring new supply online. You can't just flip a switch and mine more silver. You need to explore, to drill, to develop, to build infrastructure, to get permits, to raise capital. It's a multi-year process, and we're already behind the curve. Meanwhile, demand is accelerating. The solar industry alone is projected to consume massive amounts of silver over the next decade. Every solar panel requires silver for its conductive properties. There's no substitute that works as well at a comparable cost. As countries around the world commit to renewable energy targets, as they build out solar capacity, they're creating structural demand for silver that's not price sensitive. They need the silver to make the panels work. They're going to buy it regardless of whether it costs a little more or a lot more. That's the kind of demand that drives secular bull markets. The electric vehicle revolution is another massive demand driver. EVs use significantly more silver than traditional internal combustion vehicles. They use it in the electrical systems, in the charging infrastructure, in the battery management systems. As the automotive industry transitions to electric, as governments mandate EV adoption, as consumers choose electric vehicles for their lower operating costs and environmental benefits, they're creating demand for silver that compounds year after year. This isn't a one-time spike in demand. This is a structural shift in how the global economy uses silver. And then there's the investment demand side, which is where things get really interesting. For years, silver was overlooked as an investment. People focused on gold, they focused on stocks, they focused on real estate. Silver was the forgotten metal, the one that didn't get respect, the one that was too volatile, too industrial, too small for serious money to care about. But that's changing. Retail investors are discovering silver. They're buying coins and bars. They're buying ETFs. They're recognizing that silver offers leverage to the precious metals thesis at a price point that's accessible. You can buy an ounce of silver for a fraction of what an ounce of gold costs. And if the thesis plays out, if we see the kind of monetary instability and currency debasement that seems increasingly likely, silver could outperform on a percentage basis. Now let's talk about what happens when a God candle actually forms. It's not just about the price move itself. It's about what that move represents. It's a signal to the market that something has changed. It's a recognition that the old assumptions no longer hold. It's a catalyst that brings in new participants, new capital, new attention. When gold or silver gaps up dramatically in a single session, when it breaks through multiple resistance levels at once, when it forces short sellers to cover and momentum traders to chase, it creates a feedback loop that can sustain itself for days or weeks. The psychology of a God candle is powerful. Traders who were sitting on the sidelines suddenly feel like they're missing out. Investors who were skeptical suddenly start to reconsider. Institutions that were underweight suddenly need to add exposure. And all of that buying pressure comes into a market that's already tight, that's already showing signs of physical shortage, that's already dealing with strong fundamental demand. It's like throwing gasoline on a fire. The move accelerates, the momentum builds, and before you know it, prices are trading at levels that seemed impossible just weeks earlier. We've seen this pattern play out in other markets. We saw it in Bitcoin when it broke out of its long consolidation and went on a parabolic run. We saw it in certain tech stocks during the pandemic when they suddenly became the only game in town. We saw it in commodities during the supercycle of the early 2000s when China's growth story became undeniable. The pattern is always the same: consolidation, breakout, recognition, acceleration. And right now, precious metals are showing all the signs of being in that early breakout phase, right before the recognition and acceleration stages kick in. The geopolitical backdrop makes this setup even more compelling. We're living in a world where the post-World War II order is being challenged, where the assumptions that governed international relations for decades are being questioned, where countries are choosing sides, forming new alliances, creating new power structures. In that kind of environment, in that kind of uncertainty, gold and silver aren't just investments, they're strategic assets. They're neutral stores of value that don't depend on any single country's stability or any single currency's credibility. When you look at what's happening in the Middle East, in Eastern Europe, in the South China Sea, you see flashpoints that could escalate. You see tensions that could disrupt trade, that could force countries to choose between economic interests and security concerns, that could reshape the global order in ways we can't fully predict. And in that environment, the case for holding physical precious metals becomes stronger, not because you're betting on catastrophe, but because you're acknowledging reality. You're acknowledging that the world is more fragile than it appears, that the systems we take for granted are more vulnerable than we'd like to believe, and that having some portion of your wealth and assets that exist outside those systems is just prudent risk management. The debt situation in developed economies is another factor that can't be ignored. The United States is running trillion-dollar deficits as far as the eye can see. Europe is dealing with its own fiscal challenges. Japan has been in a debt trap for decades. These aren't problems that get solved with austerity and fiscal discipline. These are problems that get managed with monetary policy, with inflation, with financial repression. And every time a government chooses to inflate away its debt burden rather than default explicitly, it's making the case for gold and silver stronger. Think about what that means for your purchasing power over the next decade. If governments continue on their current path, if they continue to spend more than they take in, if they continue to finance those deficits by printing money and suppressing interest rates, the value of fiat currency is going to erode. It's not a question of if, it's a question of how fast. And in that environment, holding assets that can't be printed, that have intrinsic value, that have been recognized as money for thousands of years, isn't speculation, it's preservation. The technical breakout we're seeing right now is the market's way of pricing in these realities. It's the market saying, we understand what's coming, we understand the trajectory we're on, and we're repositioning accordingly. The smart money doesn't wait for the crisis to hit before they act. They position ahead of time. They accumulate when prices are reasonable and sentiment is skeptical. They build positions during the consolidation phase, during the period when nothing seems to be happening, when the mainstream media is focused on other stories, when retail investors are chasing the latest hot stock or crypto coin. And then, when the breakout happens, when the God candle forms, when prices start to move in a way that captures attention, they're already positioned. They're not chasing. They're not buying at the top. They're sitting on positions that they accumulated at better prices, and they're watching the market come to them. That's how wealth is built in markets. Not by chasing momentum, but by understanding the setup, by recognizing value before it's obvious, by having the patience and conviction to hold through the consolidation phase. Right now, we're at a critical juncture. The technical breakout is confirmed. The fundamental drivers are in place. The geopolitical backdrop is supportive. The monetary policy environment is favorable. The supply-demand dynamics are tightening. All the pieces are aligned for a significant move higher in precious metals. The question is whether you're going to recognize this opportunity for what it is, or whether you're going to wait for more confirmation, more proof, more certainty. Because here's the thing about certainty in markets. By the time you have it, by the time everyone agrees that the trend is real and sustainable, prices have already moved. The opportunity has already been captured by those who acted earlier. I want to be clear about something. I'm not telling you to bet the farm on precious metals. I'm not telling you to go all in on gold and silver and ignore everything else. What I'm telling you is that the setup we're seeing right now deserves your attention. It deserves serious consideration. It deserves a place in your portfolio strategy, especially if you're concerned about the long-term stability of fiat currencies, about the sustainability of government debt levels, about the potential for geopolitical disruption, about the erosion of purchasing power that comes with persistent inflation. For those of you who've made it this far, who've stuck with me through this entire analysis, I want to make sure you have access to the resources that can help you take action. That free guide I mentioned earlier, the one that covers wealth protection strategies for American retirees, it's in the description. But there's something else I want to offer to those of you who are serious about understanding this space. If you're an American retiree with at least $100,000 in retirement accounts, I'm offering a one-on-one educational web conference. No obligation, no sales pitch, just education. We'll walk through your specific situation, your concerns, your goals, and we'll discuss how precious metals might fit into your overall strategy. This is only available to people who mention they watched this video all the way through, so make sure you reference that when you reach out. The God candle that's loading in precious metals right now isn't just a technical pattern. It's a reflection of deeper forces at work in the global economy, in monetary policy, in geopolitical relations. It's the market's way of telling us that change is coming, that the old assumptions are being challenged, that a new paradigm is emerging. And in that new paradigm, gold and silver aren't relics of the past. They're essential tools for preserving wealth, for maintaining purchasing power, for protecting yourself against the uncertainties that lie ahead. The consolidation phase is ending. The breakout is happening. The momentum is building. And the question you need to ask yourself is simple. Are you going to be positioned for what comes next, or are you going to watch from the sidelines and wish you had acted when the opportunity was clear? The choice is yours, but the window is closing. God candles don't wait for permission. They happen when the conditions are right, and right now, all the conditions are aligning. Be ready.